Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 26th of October 2019 and we're providing our gold and silver weekly update for the week ending the 25th of October. We shall also discuss some of the factors affecting gold and silver prices this past week and of course the sudden surge and then decline yesterday. So let's investigate. Gold rose $14 last week from $1,490 to $1,504, having hit a high of $1,517 and a low of $1,481. In sterling terms, gold finished the week at £1,172. That's up £25. And in euros, it closed at €1,357. That's up €23. Silver rose 48 cents from $17.55 to $18.03, having hit a high of $18.33 and a low of $17.43. In sterling terms, it closed at £14.05. That's up 54 pence. And in euros, it closed at €16.27. That's up €0.57. The gold to silver ratio fell from 84.9 to 1 to 83.4 to 1. The Dow Jones closed on Friday at 26,958, up 152 points on the day and up 188 points on the week. And the Nasdaq closed at 8,243, up 57 points on the day and up 154 points on the week. And the S&P 500 closed at 3,022, up 12 points on the day and up 36 points on the week. Brent crude closed at $62.02, up $2.60 on the week, and WTI crude closed at $56.66, that's up $2.88 on the week. The dollar index stands at 97.83, and that's up 0.55 on the week. So, all positive signs across all borders. We concluded last week's video with the following words, quote, "So next week we shall see further consolidation of prices and a potential slight weakening of the US dollar, unless Brexit fails to pass, and if it does fail, then funds will move back out of sterling and into the dollar again." Well, this was the case as far as gold and silver prices were concerned until Thursday, and then we saw both of them rise, and then again on Friday morning, British summertime, so very late Eastern time, the night before, and we saw silver reach its week high, up 90 points at one stage. And we notified our subscribers in our video published early yesterday morning that a move was occurring, and we would have to wait and see whether it was the start of a breakout or whether supports and resistances were being tested. Now, sterling was rising quite considerably until the news came that Brexit was not happening by the 31st of October, and we saw sterling go down, and it ended the week at $1.28 to the pound, the dollar strengthening by over 2 cents. So going back to gold, and just speaking in US dollar terms for the moment, Friday proved to be what technical traders term a doji day, where the opening price equaled the closing price, or certainly within a dollar, in spite of a considerable rise in the morning and the potential of a breakout occurring. Prices closed at trendline resistance, with the next resistance barrier equal to October's closing highs of $1,519, with support close to the 10-day moving average of $14.91. Now, without going into too many technicals, it is accepted now amongst traders that both short-term and medium-term momentums have turned positive, and the MACD histogram is pointing to higher prices ahead. Now, at the time of writing this podcast, we've not received the full data as to what actually caused higher prices yesterday, except for the fact that China, which was, according to President Trump, going to buy $40 billion plus worth of agricultural products, will in fact only commit to $20 billion worth, providing the US reduced tariffs back to those levels experienced in 2017. Now, this could potentially jeopardize the Phase 1 portion of the deal the President and the Chinese have verbally agreed. And this spooked commodities higher. But then the President confirmed that everything was still on course, and the prospects of lower rates next week has ensured equity markets remained robust. Now, silver markets looked very exciting yesterday morning, but like gold, gave back much, but not all, of their gains. Technically speaking, and what many traders will note is that the 50-day EMA is moving higher, which is price supportive and positive going forward. There is strong resistance at the $18 level, but silver surpassed this a couple of times yesterday and closed just above it. There is now acknowledged support at $17.50 and then $17 underneath. Resistance at 18, but this has been broken. And we see this as positive moving forward, certainly short term. Now, last week's economic data was relatively soft. And as we mentioned in our video yesterday, and we'll quote from it briefly, the International Monetary Fund lowered its expectations for global growth in 2019 to 3%, the lowest rate since the financial crisis. This week we've seen existing home sales in the US fall in September from 5.5 million in August to 5.38 million. Durable goods orders also fell in September from plus 0.3% in August to minus 1.1%. And new home sales were down 5,000 from August, but were just about in line with expectations, unquote. But this coming week is the all-important one for a host of reasons, and we've heralded this now for 3 weeks. Not least being the FOMC announcement due on Wednesday. And with the markets expecting a 0.25% cut, in fact, there is a 90% plus expectation of this cut. It will be Jerome Powell's comments afterwards at the press conference that will be closely listened to. If he is hawkish interest rates, i.e. indicating that perhaps they don't need to fall further very soon, gold and silver prices may indeed retract. But if he is dovish, or indicates in some way that we could expect a rate cut in December, then we may actually see some very positive moves upwards for gold and silver, providing, of course, they haven't already occurred before that announcement. In other words, if the market gets ahead of itself. So let's take a look at the economic data, which could and probably will impact gold and silver prices this week, because it'll have an impact on the dollar and as well as an impact on traders' expectations and equity markets. On Monday, we have the advanced trading goods for September. Tuesday, the Consumer Confidence Index for October. Don't underestimate that. Now, Wednesday, we have the GDP figures for quarter 3, and the forecast is 1.7%. And we also have the FOMC interest rate announcement and then the subsequent press conference by the Fed chair. That's the key day. Thursday, personal income, consumer spending and core inflation for September. So again, important economic data. And then on Friday, the non-farm payrolls for October, unemployment rate and average earnings for October, and the market manufacturing PMI and ISM manufacturing indices, all for October. We cannot believe that the Fed will not have an indication of the information coming out Thursday and Friday, which is why we are relatively confident that rates will be cut. So, this coming week has what we call a whole cacophony of economic data, plus the important FOMC announcement. Now, we are expecting gold and silver prices to rise prior to the announcement on Wednesday. Not necessarily hugely, but we're expecting a firm movement. And as already mentioned, depending on what Powell says, will determine the direction going forward. If there's a strong chance of another rate rise in December, and that is indicated by Powell, then gold and silver will move even higher. Otherwise, as we've already mentioned, we may very well see a correction. But much depends on how much movement there is early next week. Now, we've spoken with an economist who we're in close contact with and often, to be candid, consult but not necessarily listen to. Perhaps we should more. And he predicts monetary and commodity cycles. And it is his view that prices will rise pre-Wednesday and then fall back, remaining subdued for 6 months until the cycle regenerates. Now, we're not prepared to go that far as yet, as we need to see what the Fed has to say going forward. But we're also not going to rule out his prediction, as more often than not he is right. But there are so many factors at this moment that are acting as what we call tailwinds, in other words, pushing prices up, that to a large extent the headwinds are just not competing. And so we don't necessarily agree with his prediction, but we're not ruling it out completely either. So what we will state, though, is that we are now of the opinion that there are reasonably solid floors under both gold and silver. For gold, it's $1,400, and silver, it's $1,550. Now, we're not saying it's going to go down to those levels. In fact, what we are saying is we're extremely confident they're not going to get to those levels this year. So the upside potential is far more appealing than the downside risk. Now, we're still not in the camp to seeing these prices move dramatically forward in the next couple of months. But we can see over the next 12 months a grind upwards with obvious peaks and pullbacks. Perhaps what is persuading us far more than the technicals, the cycles, or the supply and demand equations is that we are aware from our contacts in the industry that gold in particular, silver to a lesser extent, but gold in particular, is now on the professional investment advisory community's radar, as we mentioned earlier in the week. And this in itself will create a slow but positive groundswell of monies, new monies, entering into this space. Now, equities may still have one last bull leg to go first. That is a distinct possibility, and we rule that out at our peril. But even the most aggressive funds and advisors are looking 12 months ahead and are beginning to prepare. Now, before we close, we're looking at the theme tune competition of the next couple of days, and we'll notify you of our winner early next week. Thank you for listening, and please note, we've listed below the videos we feel have proven to be very important during these past 2 weeks. And if you haven't already done so, please subscribe to our channel, press the bell sign so that you're notified as new video podcasts appear. This is very important, as if we see or identify that prices are likely to move, we will be on the ball and hope and trust that you get our information as quickly as possible. And by pressing that bell sign, you will, because YouTube will notify you virtually immediately the video is published. Have a great weekend and a very, very prosperous week ahead if all goes according to plan. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.